Stocks fell again yesterday, wiping out gains for the S&P 500 this year. But more important to some investors, it's getting more expensive to protect against such declines. The VIX, it measures implied volatility, but some just call it a gauge of fear, rose back above 35. Dean Curnutt is a volatility specialist and president of Macro Risk Advisors. Dean, welcome. Just a few months ago in February of this year, at a panel discussion I was moderating, you predicted that the VIX would go back up to 45. You called it a good old-fashioned crisis, nothing quite like what we saw in 2008. Here we are, less than 2 weeks ago, the VIX topped 42. Is it going to go back up to 45? Is it going to go even higher?
You know, I think the vulnerability of the system actually is quite high. When we made that prediction back earlier in the year, we were looking at what we viewed as reasonably unsustainable levels of sovereign debt and a market that was growing increasingly frustrated with a government's plan of action or inaction. And I think, you know, in the case of the EU this week, it's really about credibility. You know, thinking about Bernanke's plan with respect to quantitative easing and how well implemented it was with regard to lowering risk premiums. That's really what government intervention at this point is about for the markets. It's trying to compress risk premiums like credit spreads or sovereign CDS or the VIX, but it really is quite contingent on the credibility and the size of the program. And I think what we're seeing with the EU this week and the randomness out of Germany just a couple of nights ago in the short selling is the market's just questioning the credibility and the wherewithal of the program. And as we think back at what Bernanke was able to do with quantitative easing, it really was about the market buying in to the fact that he was going to stay the course. He had you know, a real plan of action and real firepower just in terms of, you know, implementing the program. The market's questioning that right now with regard to the EU's plan.
Dean, from the perspective of an investor, from a risk manager, the kinds of people that you advise, is what we've seen in the VIX all bad? Is there any way to take advantage of the kind of volatility that we've seen?
Yeah, there certainly is. You know, I'd say that, look, hedging's quite a bit more expensive than it was earlier in the year, and that was really what was on our radar screen was, you know, Bernanke was, via quantitative easing, compressing risk premiums to a level that we thought was unsustainably low as he was forcing people out of cash and into risky assets, and that was compressing these premiums. So the cost of hedging is quite a bit higher now, but, you know, look, one thing is important for investors to realize is it's definitely not too late. There's still very valuable and effective hedging programs that can be implemented via the U.S. listed options market. With regard to taking these risk premiums and utilizing them, yeah, absolutely. I'll give you an example. You know, to the extent that investors are comfortable in the financial space, right now, the price of out-of-the-money puts on financials has gotten extremely high. Now, we happen to be bearish on financials, but at the same time, we're not bearish in the same way we were in late 2008 as the system was completely unraveling. So investors might look at these out-of-the-money puts and say, you know, look, there's opportunities to collect these premiums, you know, or you know, monetize premiums against long stock positions in financials. That's how high these premiums are right now.
Dean, we have to run, but I do want to ask you for a quick answer. You're looking ahead to the rest of the year. How high could the VIX go?
It's really a function of the credibility of the EU and whether the bond market vigilantes start to move to more developed nations like the U.S. and the U.K. I think my suspicion is I think that 45 level or maybe slightly higher, again, depending on how the rhetoric comes out of the EU, will be, you know, kind of the high for the year, but it's certainly going to be a bumpy ride.
All right, we gotta end it there. That's Dean Curnutt of Macro Risk Advisors.